If you have been wanting to start investing, but you aren't sure of where to put your first $100, just know that you are not alone, okay? It can feel confusing trying to pick the right stocks or the right funds, and most beginners end up stuck, overwhelmed, and never starting. And I know that because that was me. But since then, I have built a multi-six-figure portfolio, and I want to help you do the same. So in this video, I'm going to show you my preferred way to invest $100 in 2025 and beyond using ETFs, specifically exchange-traded funds, so your money can grow hands-off while you continue to live your best life. You'll learn why investing matters, how ETFs compared to stocks, which you're likely already familiar with, and as a bonus, if you stay to the end, I will show you the exact account I personally use and recommend that you invest your first $100, which has grown my money this year alone by 13%, you guys. So before we get into it, hey girl, hey, my name is Jocelyn and I am the founder of Maximize Money, where I teach women how to create their dream lives with their 9-to-5 incomes so that they can do more of what they love without trading their time for it. All right, let's start with the most important thing, why investing matters. So at its core, investing is putting your money to work so that it can make more money for you over time. It's allowing our money to grow hands-off, hands-free in the background while we're working, traveling, resting, sleeping, brunching, etc. And by investing, it allows you to grow your money through ownership, through stocks, bonds, ETFs, index funds, which gives you access to companies that you now own a portion of as an investor. Another key reason why you want to invest is because of inflation. We all complain about inflation online every single day. And what inflation is essentially the prices of goods and services increasing year over year by a certain percentage. So that car you might have bought in 2024 for $15,000 might be worth or might cost you more in 2025. And the rate of inflation for 2025 alone is 2.9%. So that means everything is 2.9% higher than it was in 2024. And if you don't invest your money is essentially losing value to inflation, which is why I don't want you to just leave it in a savings account. Leave what's needed in a savings account, which is, I recommend 3 to 6 months of living expenses. But outside of that, baby, you need to be investing that money, okay? So that you can beat inflation, so that you can build wealth for your future and not have to work forever. You can also have financial freedom that's not attached to a job, and it gives you the freedom to do the things that you want to do, to travel, to buy a home maybe, to pay for your kids' tuition, your college tuition, things like that. So when it comes to investing, it is not about time. It is not about luck. It is about time. Time in the market beats you trying to manage all of the investments at once. So if you are completely new to investing and you're like, okay, I need a little crash course or something, go ahead and click the link in my description to get access to InvestHER 101, which is my free 20-minute guide that gives you a baseline understanding of all things investing. I go over the different accounts that you likely already are familiar with, some other accounts you need to know about, as well as the different stock and investment options that are out there in 20 minutes. It's a deep dive into investing for beginners in a way that is understandable, that's relatable, and with tons of examples so that you can understand the power of starting with that $100. And that is linked in the description. And again, it is free. It's a 20-minute crash course. It's video-based, so you can take notes, watch it over and over until you understand exactly what investing is so that you can feel confident when it comes to investing that first $100, okay? Again, linked in the description. So now that we know why investing matters, let's talk about my preferred way to invest that $100, and that is with ETFs. ETFs are exchange-traded funds, which essentially allows you to own a variety of stocks or bonds or a combination of both with one purchase, and it gives you access to multiple companies. So let's say you were like, okay, I want to own stock in Google, and you decide to just buy that stock in Google. But what if you said instead, I want to own shares of Google, Meta, Netflix, Apple, for one purchase. And that is what an ETF is. It's a basket of stocks and bonds that you buy for one purchase price. And it's often a pretty low price compared to trying to buy Apple for $200 and something. You can actually buy something like BGT, which is a tech-based, ETF that gives you visibility into multiple tech companies for one purchase price. And that's so important because it lowers your risk. If you have just a bunch of individual stocks out there, you are going to be flustered when things go crazy and maybe they lose money or they don't pay out dividends. It can be anything, and you look at your, investment portfolio stock tanking. But with ETFs, that bag of stocks gives you diversity across multiple companies. So even if Google is acting up today, Apple and Microsoft could be flourishing. So that means, okay, good, my money is still doing right, and I'm happy with that. Another reason why I love ETFs is that it's a low cost of entry, okay? So you do not have to spend $500, $10,000 to start investing. You can usually spend, $100 to $200 to start with an ETF. It may not be VGT. VGT is a little more expensive, but I love ETFs because it gives me that diversification, which is very important as a beginner investor. You don't want to lose any money early on, as well as it gives you that low cost to barrier, low cost to entry. So you can invest with $100, $200, and it's hands off. The money is growing while you're sleeping, traveling, working, etc. So you might be wondering, how do ETFs really compare to investing in individual stocks? So as I mentioned, individual stocks are often a single company that you own. And with that comes higher risk. Let's say Google goes crazy and everything crashes. They get some, fraud alert, or like anything happens, and it requires you to be constantly monitoring. And it's like you're watching the whole news and you're tracking the stock, and you're just overly concerned when you could really just be investing in an ETF, an exchange traded fund, which gives you that diversification. It has that lower risk because it is diversified and it's hands off. You don't have to be monitoring the news every day to see what a Google is going to do, So if you're wondering if you can really grow your money with ETFs, yes, you absolutely can. And as a tip, and I don't want you to start investing in this just yet, we want to take our time. I want you to look up VGT. I'm going to put that on the screen. VGT, it's a tech-based ETF. I personally invest in it amongst other things. And I want you to look at how it's performing for the last year. Just Google just Google the past performance of VGT, which is an ETF. Like, put that in Google and see what it's looking like, So, as I mentioned, as a bonus, I want to share the account that I personally use and recommend for investing in ETFs, your recommendation, which is a IRA. So an IRA stands for an individual retirement account, and essentially that is an account that will allow you to do two things. One, if you decide to do a Roth IRA, it allows you to enjoy your money tax-free later on in life, and then if you decide on a traditional IRA, you can, lower your taxable income now, which means the money that you pay to the IRS now is less based on whatever you put in there. So I'm going to give you two quick examples of what that looks like for both. So let's say you have $60,000 that you want to put into a Roth IRA. You do not get a tax credit on that money right now. You still would pay that $60,000 in income, but when it's time for you to retire that or withdraw that money after 59 and a half, that's the age, the minimum age, then you withdraw, let's say there's $2 million in that account, it's your money and you don't have to pay any taxes on it, okay? Now, from a traditional IRA perspective, this is for people that make a little more money. If you make over $150,000, you technically do not qualify for a Roth IRA. So you would choose a traditional IRA because it lowers your tax burden now. The amount of money you pay to IRS is lowered now, but you do have to pay taxes on the money withdrawing later because it's lowering your taxes now. So again, that same example of $60,000, and let's say you put $6,000 in there, in 2025, 2026, your taxable income is now $54,000 instead of $60,000 because that money has went into the traditional IRA, which is a pre-taxed account. So if you want me to do a video on IRAs, a deeper dive into IRAs, just comment below IRA and I'll be sure to see it. And then if I see a lot of it, then I'll be sure to, prioritize that. But again, if you're a beginner and you're looking for the best way to invest your $100, start with ETFs, exchange traded funds. Just choose one. You don't need multiple ETFs to start off with, and invest in it consistently. 2 is to invest that money and buy those ETFs in an IRA. Choose either a Roth IRA or a traditional IRA. And if you're like, okay, girl, like I'm clear, but I'm still a little scared to get started, like, can you offer me a little more help? Yes, I will be doing InvestHER Live, which is a live virtual workshop where we invest our $100 together. So we'll be investing that $100 in an IRA, whether it's a traditional or a Roth IRA, and you will get my blueprint for choosing the right ETF based on your goals, your lifestyle, and I'll show you how to determine a good ETF over one that's not something that you want to, move forward with, because there is levels to this. There's a strategy to it. And I'm thinking about creating a video as well on it. So comment below and let me know if I should share my top secrets on investing in ETFs. But if you're like, okay, no, but I need you to hold my hand and we can do it together virtually, then click the link in the description for my wait list for InvestHER Live. It may already be live, depending on when you watch this video, but that'll be happening at the top of 2026. So I'm excited to help you get started on your investing journey. Again, one account, one ETF, and we're going to continue to see it grow. That's what we're going to do on InvestHER Live. But if you have any questions now, if there's any other videos that you'd like me to create on all things investing for beginners, just comment below. Please like, comment, share, subscribe. Share this video with someone that you know wants to make investing their reality in 2026. We're not talking about it, we're doing it, and I'm here to help you move forward with your journey. So thank you so much for watching, and I'll see you on the next video. Peace.